This episode is brought to you by Google Gemini. With the Gemini app, you can talk live and have a real-time conversation with an AI assistant. It's great for all kinds of things, like if you want to practice for an upcoming interview, ask for advice on things to do in a new city, or brainstorm creative ideas. And by the way, this script was actually read by Gemini. Download the Gemini app for iOS and Android today. Must be 18 plus to use Gemini Live.
This episode is brought to you by LifeLock. The holidays mean more travel, more shopping, more time online, and more personal info in places that could expose you to identity theft. That's why LifeLock monitors millions of data points every second. If your identity is stolen, their US-based restoration specialist will fix it, guaranteed or your money back. Get more holiday fun and less holiday worry with LifeLock. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.
Hey gang, Akil here. Welcome back to the Trading Coach Podcast. Today, we're going to talk about copy trading, explaining what it is and is it something that you should consider. Now, this Trading Coach Podcast idea comes from an article I just read on the Trader Vault. If you guys haven't checked it out, make sure you do so. It's thetradervault.com. Pretty cool, short, quick, easy to read articles, which are the type I like. As you know how me and words have a interesting relationship. And what I want to do is I want to read segments of the article to you, but also hop in and give my opinion. And I guess we should start off with kind of explaining what copy trading is. And the name is kind of self-explanatory, right? Copy trading is copying someone else's trades. Now, you're not hacking into someone's computer or anything like that. You're not even doing kind of like the old school signal service necessarily, where you're signing up with someone and they shoot you an email or they have this group chat on like a WhatsApp or something like that. I don't even know what's going on. They're probably streaming on Twitch or something now. But copy trading is signing up for a service. Well, one form of copy trading is signing up for a service where there is a trader or a group of traders, different options on the services. And what you do is you essentially link your account, meaning that when that trader executes a trade, boom, you automatically execute the trade as well. So you kind of follow it. Now, again, there are different versions. We had a service like that very, very early on in my trading career, where we developed a whole app and it would give you a ping on your computer. And then you had the option of whether you wanted to choose to follow the signal or not. I can tell you that from a personal perspective and a professional perspective, just working with traders and understanding kind of the ups and downs that we go through psychologically. There we go, got that word out somehow. I think if you're going to choose to do something, you want to be consistent with it. Therefore, you don't want to put yourself in a position where you have to think. You don't want to have to put yourself in a position where a signal comes up and you have to decide whether to take it or not. I would say that you should put yourself in a position where you automatically link your account to the copy service, and whenever that trade is taken, boom, it's automatically taken pretty much without you knowing about it. This kind of goes back to like more of a personal finance thing as well, where, you know, one of the reasons people struggle with budgeting is because we simply don't have discipline. One of the reasons people struggle with a lot of things in life is because we simply don't have discipline. So if you've put yourself in this position with your personal budget where you're saying, hey, I'm going to take 30% of my bi-weekly check and I'm going to put it into blah, 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 blah. When you actually have to get your check, go into your bank account, kind of figure it out, do the math and do it, you're much more likely to not do it or not do it the way that you're supposed to. But if you have a way to automate it where it's like, hey, once this comes in, boom, it already divides for you. It's kind of like one of those things, out of sight, out of mind. You don't have those psychological things happening. It's kind of like taxes. They're just take it out and before you know it, it's there. Or kind of like a 401k where money is automatically put in there. You don't have to worry about putting it in there yourself. And then you check back every once in a while and like, oh, wow, how did that get so big? Well, because you've been consistently doing it. So I think if you are going to take the copy trading route, instead of kind of like the old school signal service where boom, you get a message and you choose, I think you want to commit to saying like, hey, I'm going to do this every single time. Now, something that's also important to understand is that when we talk about copy trading, please be aware of the word trading. This is different than investing. So typically with most copy trading services, we're looking at really assets that have more fluctuation. So, Forex, crypto, stuff like that, not necessarily kind of like longer term investments. Now, let's talk a little bit about the pros and cons of copy trading, because there are some pros and cons to consider. Let's start with the pros first. That way I can make you feel good and then pull the rug out and make you feel a little bit bad later. But the pros of copy trading is that it's very accessible for beginners, right? It is an easy way to get started, right? We told you that it takes a long time to learn how to trade. And I say that as someone that has been through it myself. I say that as someone who teaches traders. Typically, what you're looking for in a typical learning cycle, like before you can be a consistently profitable trader, meaning, starting from scratch and actually making money, you're looking at anywhere from 6 months at the very quickest to about 18 months, right? And kind of anywhere in between, depending on kind of what your background is, how good you are, how many mistakes you make, and I'm saying this, and this is for people that sign up with like mentors and coaches. If you're not with mentors and coaches, good luck. You may never get there, but I would at least double it, 12 a year to 3 instead of kind of a half a year to a year and a half. I would say that's probably a pretty good estimate. But I would say most of you people just fail that way. So if you're a beginner and you're looking to get exposure to the market in more of an active way, this is a very easy way for newcomers to get started. It's also a very time efficient way as well, right? Now, I'm at the point in my career where my trading doesn't take too much time. I'm mainly a swing trader, so I operate on the higher time frames, 4 hour and hourly, and I'm a seasoned vet, so I know what I do. I have a routine. I know exactly what to look for. I don't care about stuff that doesn't personally affect my profitability in the market. So I probably spend, just as far as like trading and analysis goes, not like the coaching stuff and the live room stuff, I probably spend about 30 minutes to an hour a day on a chart, which isn't a lot at all. But understand that 30 minutes or an hour is a lot to certain people. And while you're in that learning process, that's going to be a lot longer. There's a much more, if you're doing a copy service, it's really a much more time efficient way to have exposure to the market. Yes, there's going to be a lot of time on the front end where you're, researching the people that you plan on copying, where you're doing your risk management and your money management and stuff like that. But after it's all said and done, it's really kind of plug and play type of deal where you don't really need that much of an actual analytical commitment. The only commitment that you need is obviously keeping track of performances and making sure everything is performing the way that you expect. And then any type of monetary changes in the background, or are you copying someone else? Or are you adding to your account? All that fun stuff. But as far as like the analysis, you don't have to do it. Why? Because someone else is doing it for you. Another pro is diversification, right? When you follow multiple traders or multiple investors, you can create a pretty diverse portfolio. Everyone has a different style. Maybe people trade different markets. Maybe someone's stocks, someone's Forex, someone's futures, someone's crypto, someone's commodities. Like, you have a chance to really diversify your portfolio, where if you were doing this by yourself, you might not, right? Again, I've been trading for a very, very long time. I started off in the stock market. I went to Forex, and I get asked the question all the time, when are you going to head back to the stock market? And all the time I say it's a goal of mine, but I don't see it being realistic. Now, again, keep in mind, I do the teaching and the coaching thing, which takes a massive amount of time away from me. But the fact of the matter is that, one of the reasons that I'm really, really good at Forex trading is because all of my focus is on Forex trading, right? If I then wanted to split my focus and actively trade stocks, right? Investing is a little bit easier because it doesn't take as much time. But if I wanted to actively trade stocks, now I'm spending half my energy, or probably 3/4 of my energy, researching stocks and breaking down my list and stuff like that, only 1/4 of my energy on Forex. I can almost guarantee that my performance is going to dip. So it's a little bit hard for me to diversify with different markets. I can diversify within Forex, fine, but within different markets, it's going to be a little bit harder versus me just finding Joe Smo and being like, oh, he has a copy service for crypto. Let me just follow that. And boom, I've just added crypto to my investment portfolio. And again, just for diversification in general, I just got an email from I'm on a board of a nonprofit, and I just joined another thing. Right, I'm supposed to be saying no and doing less, but I'm doing more. I'm on the financial advisement committee, and we just brought a survey to the board of directors about kind of what type of investment profile do you want, and how much do you want to diversify, and growth, and low risk and high risk, and all that fun stuff. So diversification is key. And the article here says that they found research on Zulu Trade that shows diversifying across 3 or more traders when it comes to kind of a copy service, it reduces your risk up to 35%. When it comes to following a single trader. And of course, you don't want to put all your eggs in one basket, especially when they are non-trusted eggs, because again, you are blindly copying someone that you don't know. So you don't have any control, which we're going to get to a little bit later. Now, the last aspect, and this was something new that I found out, because again, I don't research this stuff. I focus on what I focus on and nothing more, nothing less. But they said that there's a community and learning opportunity to copy trading, right? So again, back in the day, there was nothing, right? You just, copy trade, signal, do it, don't do it. Apparently, a lot of these platforms now do offer that community involvement, which is the reason we started Tier 1 trading in the first place. And we were one of the first companies to bring in the community aspect to trading, because we thought that was much more important than just kind of learning how to trade. Good to see that our method is still being followed, but it's important because this community engagement allows you to actually put yourself in a position to learn, where instead of just blindly following a signal, you can now ask questions. Hey, why was that trade taken? Or if that trader explains and puts up a write-up. I used to do this when I would do investments for other people. I would put up a report and a write-up detailing what exactly I was looking for, the time duration, all the fun stuff. That way they had an idea and a little bit more trust for what I was doing. As a newer trader, when you see this, you can kind of learn the ins and outs of a strategy. Oh, this is why that trade was taken. Oh, this is what they're looking for. And obviously, if you're trading good traders, it's very helpful to see and really kind of get a feel for what these traders are doing. And it could help kind of bridge the gap. Meaning, if you're not looking at a trade copying service as being something temporary, or if you're looking at doing it while you're learning in the background, this can be kind of a bridge that helps you educationally, and then you can kind of go off on your own, right? Save the fees that often come with these services, which we're going to revisit later as well, and kind of basically achieve the same results without paying the fee to achieve those results as you become a consistently profitable trader in your own right. So those are some of the pros. Let's get to the cons now. And one of the biggest cons, this is probably an obvious one, is that you're dependent on someone else. And some people are okay with this. Some people are not okay with this, right? I am someone who is not okay with this, right? The whole reason I got into trading in the first place is because I wanted independence and I don't trust anyone but myself. For me, I had a bad experience where I got fired for no reason at a job, and it didn't make sense. It did not compute. In my head, right, if I do good work, I should keep job. If I do bad work, I should get fired, but it's all because of me. I got fired for something that I didn't do, and there was no reason aside from the company wanted to cut. And I got fired without even knowing I was fired, man. Not to get too deep into this rabbit hole, but I was on a spring break vacation 12 hours away. I drove back 12 hours back up to open the store at 4 o'clock in the morning in a snowstorm, only to realize that I was fired. I could have slept and been a lot happier, right? So I'm not too bitter about being fired. It was the fact that I came in 4 o'clock in the morning in the snow to find out that I was fired. You could have shot me an email? Huh? You could have shot me an email? Anyway, not bitter. Getting back to the program. But I got into trading because, and a lot of you guys have probably experienced during COVID, unfortunately, where outside factors influenced your life and you have zero control. The cool thing about trading is that I live or die by my decisions. If I make bad decisions in the market, I pay the price. If I make good decisions in the market, I reward myself. And there's no ceiling for how much I can reward myself. It's all based off of how good I want to be. And that's having no ceiling is really intriguing because there's nothing stopping me. There's nothing in my way from being great. There's nothing stopping me from being very, very bad as well, but I'm kind of weird and I like that. I like the idea of like failing because it motivates me to be good. I don't fear, I fear failure, but don't fear failure. Like, I don't fear failing because I'm confident that I won't fail, but I fear failing as motivation not to fail, if that makes sense, as I sit down on the couch and tell you about all my mommy issues. But dependency on another trader is difficult because if you've got a lot of money on the line and you're dependent on someone else, it's, and you know, we're all dependent on someone else at some point in life, but it could just be very mentally exhausting, especially when things are going bad. And when I managed money, I dealt with this a lot, where when I was having rough streaks, my clients would chime in, and you can hear and see that they got very fearful simply because they did not know what was going on. And that could be the same thing with being dependent on someone else's signals for you to make profit. Control is another one they listed. We kind of talked about control already. You have minimal control. You have control on whether you follow or don't. But as far as like the individual trading decisions, you don't have that. That becomes rough if you are actually a trader as well. Because if you are a trader, you typically have an opinion on something. Meaning that if I'm a trend continuation trader and I'm watching the euro dollar, I'm looking for trend continuation opportunities. I have this philosophical bias in the market. At the same time, if a signal comes in and it is counter trend, it goes against what you believe. Well, now there's a conflict of interest, right? Do you do what you believe in? Do you do what the signal says? It's a tough one. And this is what I mentioned earlier about you want to have it automated so it's consistent. You don't want to give yourself the decision to make it your own, because then you might as well just be trading on your own. Fees and profit sharing is another one, right? These things ain't free, right? You're gonna pay a price. Now, again,
This episode is brought to you by AWS. Amazon Q Business is the new generative AI assistant from AWS. Many tasks can make business slow, like wading through mud. Help! Luckily, there's a faster, easier, less messy choice. Amazon Q can securely understand your business data to help you streamline tasks, like summarizing quarterly results or doing complex analyses in no time. Q got this. Learn what Amazon Q Business can do for you at aws.com/learn more.
When you're on the go and it's time to refresh your energy, grab an ice-cold Celsius Arctic Vibe, where zero sugar, 7 essential vitamins, and proven ingredients meet the pure refreshment of frozen berry. Unlike traditional energy drinks, each sip of Celsius is a perfect balance of flavor and function. So whether you're hitting the gym, the office, or your next adventure, grab an Arctic Vibe at your local retailer or visit Celsius.com to learn more.
Paying a price isn't necessarily a bad thing, right? We pay money for people to do services for us all the time. If you're making more money and you're gaining time out of it, not a big deal. But if you are a trader and you can produce the same return with the same similar time investment without paying the cost to do so, it may or may not be a better deal for you. Again, that's kind of a discussion you have to have with yourself on how much do you value freedom. You know, for example, some of these platforms, I think they charge like 10 to 20% of whatever the gains are. And that's going to have a massive impact on your results, especially when you start to realize that, you know, we're not looking at 200% results, 200% return on investments. They're going to be more realistic. Now, this next part of the article is what I found to be interesting, and these were some real-world results on copy trading statistics from a few places. I'll touch on a couple of them, but there was a study by eToro that said users, this was a survey that they did with their clients, and they said users found that 60% of new copy traders experienced a positive return in the first year, compared to 40% of those trading independently. Now, I would say this, that 40% of traders independently that are experiencing a positive return in their first year, that number is probably less, right? We talked about the Mark Douglas pyramid of success, right? If we look at the top 1%, there's 1% of that pyramid that becomes super traders. Like, these are the ones that are actually doing the stuff that all these YouTube gurus are talking about. The reason you don't hear about them is because when you're making massive money like that, you don't tell anyone. You are purely focused on your returns, purely focused on your money. Anyone on the internet, most people on the internet that are bragging about these 1,000,000% returns, if they were actually making it, they wouldn't be bragging about it for a handful of reasons. But there's 1% of traders that become like super traders. Then there's like the rest of the 9% or so that are good traders. You gotta have that 10% so that are like successful traders, consistently profitable traders. You then have like a 30% range at the bottom of traders that just suck, right? They stink, they're bad, they fail. That's the whole 90-90-90, where 90% of traders lose 90% of their account in the first 90 days of trading, which is an actual like stat from a broker. So you have that at the bottom. And then there's that 40% in the middle, and this is the Mark Douglas boomer busters. These are the ones that are kind of stuck like Chuck, and these are probably the ones that might go to signals or copy services as well, because they're trying to figure it out. They're not bad enough to fail, right? There's something there, but they're also not good enough to make a reasonable return. So just keep that in mind when you hear this number about 40% of traders that do this and do that. You can make a positive return, but it's not a positive enough return to make it worth your while. If you make a 2% return in the markets per year, you technically didn't lose money, but you didn't really do anything of value. You're better off putting your money in the S&P and just holding it there for the entire year, and you'll make much more than that. So kind of always take those numbers with a grain of salt. Some more data from Zulu Trade this time said that analysis showed that diversified portfolios, and I said this earlier, of 3 or more traders, right? They had about 30% lower volatility than people copying a single trader. And it's the same as building a portfolio. What we want to do as traders is we want to manage our equity curve volatility, right? Yes, we may have great returns, but if those great returns come with big, disgusting, bad drawdowns, that's not necessarily a place we want to be in. This is why we want to diversify our trading strategy. We want to diversify our trading portfolio and have different pairs in there that are kind of steady Freddies, kind of aggressive ones that go up and down sharply, and then consistent ones. That way we can have as smooth as an equity curve as possible, because when we have that smooth equity curve, we can do some really, really fun things with money management, compound our account, and that's where you really start to see the magic of the financial market. So if you can have a handful of different traders trading different markets with different returns, you're going to put yourself in a much better position than just kind of going all in with one person that you think is the super secret guru. Lastly, it said profit range. When while individual returns obviously vary, there was a report that said annual returns, I think this was on Zulu Trade, returned between 7 to 15% when following a handful of top traders. So once again, you want to look at those numbers and do the comparison. One, is 7 to 15% more than I can make on my own? And you got to take into account that 7 to 15%, not counting whatever fees you're being charged to do the service. Is that worth it? Or can I make more trading personally myself, right? And again, there's no wrong or right answer. It all has to do with how much do you want to get out of the market? What part does this copy service play in your bigger financial picture? But you want to make sure that the returns are worth the money and worth the time and worth the opportunity cost of doing something else. So in conclusion, does Akil L. Stokes recommend copy trading? I don't know, right? Do what you want. There's no right answer for everyone out there. It all depends on what you're looking to get out of it. And it's all about knowing yourself as well and knowing what you can handle. I think that the best thing to do in any situation is just know the information, do the research, look at things from all different perspectives. And that's what I always try to give you guys here with the Trading Coach podcast. This is what I do with the traders I work with at Tier 1. I try not to give them, very rarely is there a need for a yes or no answer. If something is blatantly wrong, then yes, you're going to get that yes or no answer. But typically I try to look at both sides and educate on both sides. That way you have all the information at your disposable income, that's what I'm thinking about. You have all the information at your disposal, then you can make the most educated choice for you in your personal situation. So hope you guys enjoyed the podcast. Again, read the full article over at thetradervault.com. They got a lot of cool ones. I brought you some ideas from them before. Make sure you rate and review the podcast before you leave. It takes a second, but it makes me happy, very, very happy. And don't you want to see me smile? Until next time, plan to trade your plan. Take care.